Hello viewers, so welcome to my channel. I'm Hasham Ali Khan. Last two videos I have explained you about accounting standards, objectives of accounting standard, benefits and limitations. That is in the first video. Second video I have explained you about the process of formulation of accounting standard. How the accounting standard will be prepared, who will prepare, how it will be issued. Those things I have explained you in the second video. So two videos completed. This is the third video. In this video, I'm going to explain you two topics. The first topic is regarding the list of accounting standards issued by ICAI. And secondly, conversion of Indian accounting standards with global standards. These two topics I'm going to explain, and this is very, very important. Watch the video till the end. Don't skip in between. If you want the complete knowledge, watch all the videos in sequence, one after the other. Then only you can be able to get the comment. Don't randomly watch one and then second, third video like that. Keep a sequence. If you have not watched the first two videos, I suggest you to go to the playlist of my channel. Select the subject accounting standards. Watch the first two videos. Be acquainted, clear with the meaning of accounting standard, why it is prepared, how it is applied. Now, before starting the discussion on list of accounting standards, take the screenshot of the points which I have given on the board. Now, first of all, list of accounting standards issued by ICAI, Institute of Chartered Accountants of India. Remember, all the accounting standards are issued by the Council of ICAI, but it is prepared by the board called ASB. So here, list of accounting standards. The ICAI has so far issued 29 accounting standards. 30, 31, 32 was already repealed, was withdrawn. But presently 29 accounting standards are there. So, but again, accounting standard 6 on depreciation accounting has been withdrawn on the revision of AS10. Accounting standard 6 was on the topic of depreciation accounting. Later on, this AS6 was withdrawn by inserting all the points in accounting standard 10. That is accounting standard 10 regarding property, plant and equipment. One more accounting standard was withdrawn, that is AS8 on accounting for research and development. This has been withdrawn consequence to the issue of AS26 on intangible assets. So right now, out of 29 accounting standards applicable, 2 accounting standards are withdrawn. That is 6th and 8th. These two are withdrawn, right? And thus effectively there are only 27 accounting standards which are applied at present. Presently 27. The accounting standard issued by ASB establish the standards which have to be complied by the businesses entities so that financial statements are prepared in accordance with GAAP, generally accepted accounting principles. This GAAP is the international accounting principles which are applied throughout the world. So this accounting standard issued by ASB requires that all the accounting standards should be implemented while preparing the financial statements, so that the financial statement should comply the provisions of GAAP. Then in recent times there are various improvements and developments in the global accounting standard which have taken place. Globalization. Due to globalization, the world economies are integrated. Now there is a free movement not only of human labor, but also there is movement of technology, there is movement of capital, there is movement of services. So many things are happening across the globe. So the stakeholders are also increasing. A company is functioning at one country, but the stakeholders are throughout the world. They need the financial information. That means the accounting standard should be global. So due to the development, improvement in the world economies, now there is a need for global accounting standards. But as accounting standard being the guidance, being the guidelines to prepare financial statements are to keep pace with the changes in the global accounting scenario. Actually, accounting standards are prepared from Indian environment point of view. But due to globalization, there are many stakeholders staying outside India. They want the complete information according to international standards. Now there is a need to converge the Indian accounting standards with global standards. Now we have to keep pace with the accounting standards internationally. That is the need of the hour. Now, the following is the list of accounting standards. Totally 29, but effectively we have 27 accounting standards. Now, what is the list? The first one is the first accounting standard, AS number, accounting standard number title. The first accounting standard is on the topic of disclosure of accounting principles. Whatever accounting principles followed in the preparation of financial statements, those accounting principles should be disclosed. That is the topic of the first accounting standard, AS1, disclosure of accounting policies. Then secondly, valuation of inventories. Inventories means stock, the unsold stock. How to calculate the value of unsold stock? On this topic, AS2 has been issued. Now AS3 is on cash flow statement. It has also become a part of the financial statements. Traditionally, financial statements were only two, that is income statement and statement of financial position. In India, we call it as profit and loss statement and balance sheet, right? But apart from these two, one more financial statement is becoming more and more important, and that financial statement is cash flow statement. So how to prepare the cash flow statement? What are the rules of making the cash flow statement? Again, accounting standard are given. So first, disclosure of accounting policies. Second, valuation of inventory. Third, cash flow statement. Fourth, contingencies and events occurring after the balance sheet date. That means there is a time gap between the closing of the final accounts and the approval of the final accounts. So any events are happening after the date of the balance sheet that have to be reported. So in this accounting standard number 4, it deals with those events which are occurring after the balance sheet date. Then fifth, accounting standard 5, net profit or loss for the period, prior period items and changes in accounting policies. So AS5 is dealing with how to calculate the net profit, how to find out the profit prior period items and changes in the accounting policies. If the accounting policy has been changed, how it should be reported, how it should be disclosed. All these things are covered in AS5, that is accounting standard 5. Now accounting standard 6, that is depreciation, that is already withdrawn. So I have not taken his 6th accounting standard. Now I come to 7th, construction contracts. There are many businesses which are engaged in constructional activities. So what are the provisions applicable in constructional activity? Accounting standard has been given 7th. Then 8th, revenue recognition. Recognition of the transaction and event is a very important part in the process of accounting. So when we have to recognize the revenue, on this topic accounting standard is given. That is 9th accounting standard. 8th accounting standard has been withdrawn. The 8th accounting standard was on accounting for research and development. That was withdrawn. So 9th, revenue recognition. 10th one, property, plant and equipment. The 6th accounting standard was merged with 10th. That's why 6th was not there and it is included in 10th, property, plant and equipment. 11th, effect of changes in foreign exchange rates. Nowadays, many companies are MNCs, multinational companies. In this multinational companies, one of the important issue is regarding the exchange rates. The exchange rate is the rate at which one currency is changed to another currency. That is called exchange rate. And exchange rate will not remain constant. Every day, every hour, every minute, the exchange rate will fluctuate. Due to the changes in exchange rate, it will affect the income statement and also it will affect the statement of financial position. So changes in the exchange rate, how to deal, how to incorporate, a new accounting standard has been issued. That is 11th one. Then 12th one, accounting for government grants. Sometimes subsidies or grants will be given by the government. So how to incorporate, how to disclose, how to measure the government grants. Accounting standard 12 has been given. Now 13th is accounting for investments. When a company, when a business makes the investment, so how to record the investment, how to value the investment, how to disclose the investment, on this accounting standard is given 13th, accounting for investment. Now 14th, accounting for amalgamation. Nowadays there is a trend of amalgamation mergers where one company is merged with another company. So how to incorporate all the changes on amalgamation. Accounting standard has been given, 14th. 15th, employee benefits. 16th, borrowing cost. 17th, segment reporting. 18th, related party disclosure. 19th, leases. And 20th, earnings per share. 21st, consolidated financial statements. 22, accounting for taxes on income. 23, accounting for investments in associates and consolidated financial statements. 24th, discontinuing operations. 25, interim financial reporting. Then 26th, intangible assets. 27th, financial reporting of interest in joint venture. 28th, impairment of assets. And lastly, 29th, provisions, contingent liabilities and contingent assets. So totally 29 accounting standards are issued, but effectively 27 accounting standards are applied. So in examination, you may get a question regarding list out the accounting standards. So they may ask you, list down the first 10 accounting standards, AS1 to AS10. So you have to remember which accounting standard deals with which title. That's it. The next topic is regarding convergence towards global standards. Before globalization, there is no need, because every country will have their own laws, own accounting standards. But after globalization, what had happened? All the economies are integrated. There is free flow of capital from one country to another country. A company is stationed in one country, but the stakeholders, investors are located throughout the world. They need the information from the company. If the company prepares the accounts from their own laws, they may not be able to understand. So there should be convergence of our Indian accounting standard with global standards. So what is global standard? Now I am going to explain you. So convergence towards global. Accounting standard issued by ACI are prepared on the basis of the Indian environment. First of all, you have to remember, whatever accounting standards prepared by ASB in India are prepared according to Indian environment, Indian businesses, Indian conditions, Indian practices. On the basis of this, accounting standards are prepared. However, each country has its own accounting standard. Every country, the conditions are different, the practices are different, the situations are different. So every country will make their own accounting standard. So any accounting standard which is applicable in X company is not applicable in Y company, because X country and Y country are different countries. Now, however, each country has its own. Thus, the problem of business communicating to stakeholder arises once again if the stakeholders belong to different geographies. Presently, all the stakeholders does not belong to one country only. The stakeholders belong to different countries. Then it will be difficult for other countries' stakeholders to understand the financial statements. Example, in India, if only accounting standards prepared in India are applied, then some stakeholders are staying in US. They cannot be able to understand how the accounts are prepared in India, how the accounting standards are applied in Indian conditions. He cannot be able to understand. So for that purpose, we need the convergence of Indian accounting standard with the global standards. Now, there is a need to build a common language that can be understood by all the stakeholders across the globe. Now, in such a scenario, in such a situation, there is a need that there should be some standard, some global standards should be applied so that the language is easily understandable throughout the world, because the stakeholders are scattered throughout the world. We need a common language, common standard. Now, in other words, we need an international standard that can be followed by all organizations across the world. Now, the need of the hour is we need a common standard which is understandable throughout the world. Now, IFRS stands for International Financial Reporting Standard. IFRS is the global standard which is applied throughout the world. So, reports are an international standard that can be used by organizations all over the world. So, IFRS, that is the global standard which is used by all the organizations throughout the world. It is accepted. So, if any accounts are prepared according to IFRS, it is acceptable throughout the world stakeholders. Everybody will accept, no question. Now, convergence versus adoption. These two terms are different, convergence and adoption. So what is the difference between convergence and adoption? There is a difference between convergence and adoption. Adoption means full-fledged use of IFRS as issued by IASB, International Accounting Standard Board. IASB stands for International Accounting Standard Board. This IASB has issued IFRS, right, by the Indian companies. So adoption means if the Indian companies fully adopt the IFRS, which is issued by IASB, then it is called adoption. Indian company is not following Indian standard. Indian company is completely dependent on IFRS. It is called adoption. Full-fledged taken over the accounting standard of IFRS. That is adoption. Now, convergence means the Indian accounting standard and IFRS would over time continue working together to develop high quality compatible accounting standards. So convergence means we are using both. We are combining the accounting standards of India and accounting standards of IFRS. So global standards and Indian standards are combined to make a high quality accounting financial statements which can easily be understandable to everyone, whether the stakeholder is in India or the stakeholder is abroad. Now, India has chosen to converge its accounting standard with the IFRS and not completely adopt it. Now, two options are available. We can adopt or we can converge. But India has opted for convergence, not adoption. Convergence means our companies will comply both. We apply our Indian accounting standards, simultaneously we consider the international or global standard also to make the better quality financial statements, which is understandable not only to the stakeholders in India but also to the stakeholders staying abroad. That's all. So in this video, I have explained you about the list of accounting standard and the need for convergence towards global accounting standard and convergence versus adoption. Inshallah, we will continue the next topic in the next video.